Okay, with this, let's come to the third type of non-banking financial institutions and its regulation. So there are leasing uh, businesses. The third type of non-bank financial institutions are financial leasing. We have seen microfinance, we have seen payment services industry, and let's see financial leasing. Now, leasing in general is a very broad concept. It's a process. It's a kind of business that enables a person to use an asset without acquiring it, without being the owner. It allows you to use an asset, a property. So you may lease an apartment and live inside it without, being the owner of it. So leasing it essentially a mechanism that enables a person to use an asset without being the owner. In businesses, leasing comes in two forms. One is operating lease, a very simple type of rental where an asset that the merchant, the business requires is, lent for a very short-term duration. That's known as operating lease. So under TPL law, an operating lease is defined as a lease up to a maximum of 2 years term. The other is financial lease, different from an operating lease in terms of length of duration. Financial lease is for usually for the entire economic life of an instrument, in terms of the book life. Most machineries have a book life of like 5 to 10 years. Even though you see automobiles and cars on the streets that have been from the 1950s, the book life, the economic life recognized scientifically is about 5 to 10 years. That's a depreciation period. So that's what we mean by economic life. So therefore, a financial lease is for the economic life, for the full economic life of the equipment or the asset. Now there are two types of financial leases. One is said to be hire purchase, where the lessee pays lease installments for the duration of the economic life of the asset, and gradually, depending, following each payment of lease, an ownership will be transferred to the lessee from the lessor. So at the beginning of the hire purchase, the asset will be fully owned by the lessor, but at the end of the lease, it will be owned by the lessee, because each payment transfers part of ownership. So in the duration of the contract, the equipment is owned jointly by the two parties. That's hire purchase. It's a very old mechanism of financing. It's even in our civil code. The other is lease finance. Lease finance means, earlier I said financial lease of two types: hire purchase and lease finance. Now lease finance is very similar with hire purchase, but for the entire duration of the lease term, the asset will be owned by the lessor, not the lessee. If the lessee wants to own the asset, then at the end of the lease term, the lessee will have to negotiate and take ownership or buy the asset for a very nominal fee. Usually it's for nominal fee. So that's how a lease, a financial lease, it is by its very nature. Coming to the regulations, the regulation in Ethiopia, a financial lease is regulated by two proclamations. One is Proclamation 108 of 1998, 103 of 1998, and then another proclamation, amendment in 2014, proclamation number 807. There are many directives, and since 2014, financial is regulated by the National Bank, and expectedly the National Bank has come up with multiplicity of directives on how a lease financing business or how a financial leasing business is to be done, whereas operating lease is regulated by the Ministry of Trade as an ordinary business. So if you look at the directives on financial lease, you see, both prudential and non-prudential directive, requirements. There is entry requirement like minimum capital. There is fitness and proprietary of officers and so on. The capital, the minimum capital required for financial lease businesses is very high. The National Bank Directive actually categorizes financial business into two. One, low level, companies or service providers that target, the micro and small enterprises. The minimum capital for them is 200 million paid up capital. And the other category is the high level category, which targets to serve SMEs, small and medium enterprises, and above bigger enterprises. The minimum capital required for this is 400 million. You can see from the directive. So there are strict prudential regulations for financial leasing companies. There are certain bank-like regulations, like limit on single lessee, the maximum value that the company can lend to a single lessee. In case of the lower level service providers is 3% of their capital. In case of the higher level ones, is 25% of their capital. There is capital adequacy directive, very detailed one, and many other directives, such as, for example, portfolio related directives that the leasing company should serve the customers which are SMEs or manufacturing businesses. Like 65% of leases should be provided to customers in manufacturing business, or 60% should be provided to customers who qualify to be SMEs or small and medium enterprises. So that's basically about the nature of a leasing business. Leasing is new to Ethiopia, especially financial leasing is very new to Ethiopia, and there are many new developments. It has been, of course, since 2014. All the microfinance business are authorized to provide financial leasing services, and the 5 big microfinance institutions, the one in Addis Credit and Savings, the Amhara Credit and Savings, and the Oromia Credit and Savings, the Tigray Credit and Savings, I think it's Dedebit, all of them, and the one in Southern Nations, Omo Credit and Savings, I think, or Omo Microfinance, they all provide financial leasing services. And there are very few private sector players in this area, and the area is under development. But it's a very interesting area if you look at leasing contracts, even from other countries as well as from Ethiopia. It's very strict terms for leases, and apparently you may be taken aback. Why so strict on leases? But that's simply because it's very advantageous for lessees, and it's very risky for lessors. you buy an equipment using your own capital and let a lessee use that equipment without owning it for the economic life of the capital. And because of this risky nature, lessees protect themselves very strictly, and apparently sometimes seems very unfair for lessees. But I mean, that's the nature of the transaction, and that's because lessees take, I mean, get lots of advantages. They don't queue for, forex in with banks. They don't wait. I mean, the lesser buys equipment, very valuable equipment required by manufacturer or business, and gives it to that business to use for the entire duration of the equipment, and eventually get that equipment for a very small fee. In the meantime, of course, lesser charge fees, less fee, less fees. Due to this, there is one characteristic type of lease contracts, which is known as hell or high water clauses. In many countries, there are terms clauses in lease contracts, in financial lease contracts, which talk about hell or high water clauses, which means that a lessee will abide by his obligations and will pay lease fees regardless of the circumstances, regardless of the difficulties. Lessee's obligations should be strictly complied with. Again, this comes in the context of the imbalance, the advantages and risks that the parties get into in financial lease contract. So with this, let's look at cross-cutting issues for banking and non-banking businesses. In all cases, there is the application of anti-money laundering and countering alternative financing regulation, a regulatory requirement that comes in the form of know your customer. There are guidelines on know your customers. You can't just serve a customer in a financial sector without verifying who he is, where he comes from, what he does. Ethiopian nationality is also another important requirement, with the exception of financial leasing and payment gateway services. All players in the financial market need to be Ethiopian nationals. And financial inclusion is also an important objective that it's cross-cutting. All have to aim to achieve this purpose, and movable property security rights registration is also another important cross-cutting topic in all this regulatory discourse.